Now we're going into the cash flow analysis, where I use a calculator that I found online, but also I tuned it to my personal liking, and whatever type of analysis I would make, I have made some changes to the actual calculator. But you can find this calculator online. Just do some Google searching and you will probably find something decent out there, all for free. Okay, so we're going to start off with the top, right? I already put the property address right here, and now I'm gonna list the amount of units I'm gonna rent out. This is a 5-bedroom property. I'm gonna be living in one of the bedrooms, and if I go into the property description, I want to read on how many master bedrooms are in this house, and I could find this through the property details. And right now I'm looking at my other screen right here to find it. All right, so it does say there are 2 master suites for this property, so therefore 2 master bedrooms. I am going to gauge that and charge that a little bit more to my tenants and roommates that will be living here, because usually a master bedroom is more luxurious, has more room, has more space for a closet, and probably attached to a bathroom. So I'm going to start off putting 4 units as the number of units right there, because this is a 5-bedroom property and I'm living in one. So therefore there are 4 units that are going to be leased out, or 4 bedrooms, should I say. So the first rent, second rent, and third rent, and fourth rent, you see here it's already broken down. I'm just going to use some numbers that I have found through some comparison online through different websites, that I have found an average amount of rent for a bedroom that would be leased out. Based on my research through other websites, if you really want to know a little bit more on how I determine this value, leave a comment down below, like this video, and I will go make another video about how I analyze this. So I'm going to put 600 based on my analysis and information that I found. And this is 600 for the master bedroom. And this is including utilities. So 600 and 600 because there are 2 masters. And then for the other bedrooms, I'm going to charge like 550. All right. So a total income, rental income of $2,300 per month. Now, for you to understand what to charge, this is all based on you. This is not something that I would go too much overboard, because if you go to the extreme where it's not reasonable anymore, no one's going to rent your place. You have to keep in mind that you're competing with other landlords out there in the market, and you have to understand what you're willing to live with. This is more than likely going to be one of the main factors that determines whether you are covering your mortgage or not. But at the same time, you have to be a little bit more reasonable and be conservative whenever you make these numbers into the calculator. With that being said, let's keep on going forward and go into the percentage of vacancy credit losses. So based on a lot of data throughout the history of rental properties and stuff, there's basically a range of 5 to 15% per year for vacancy. So for you to really determine what your vacancy percentage is, you have to find out through talking to other people. You have to find out how frequent are people moving out of the apartment and out of your bedrooms, or out of your duplex and other units, right? You have to find that out, and that is based on a lot of factors, including the neighborhood, the type of tenants you're attracting, etc. For me, I think I'm going to put this property, since it is a single family home, through my research, I think I'm going to go ahead and go with like a month-to-month lease. So that means the vacancy probably is going to be a little bit higher. So I'm going to go with just in the middle of 10%. And so really that will cost me about like $230 per month. And this is based on just the total income right here. It's 10% of the total rental income. I'm like losing on paper $230 per month. And then now we go into the other monthly income, laundry, parking, etc. So in this case, It depends on if you have a garage or not, or you have a laundry machine. This will determine a little bit more income based on that. I know from doing a little bit of research, let's look into the actual property, that I could probably charge for garage space. But I need to find out if this property actually has a garage or not. Oh, yes, it does. It has a 2-car garage. So I don't know how much I'm going to charge, but let's say I'm going to rent out both spaces out, a 2-car garage, and I'm gonna charge like $50 per space. So let's just add an extra $100 on here, and that's just me being very conservative. I could probably charge like $75, maybe even 100 per month. So that's just me being very conservative. All right, now we're gonna go into the monthly expenses, and this I will just run it through because this is probably gonna take a little bit more time if I explain every single thing to you. All right, so starting off, property management fees. I'm gonna manage my own property, so therefore $0. Next off is repairs and maintenance. I'm gonna gauge this is about like 5% of my total rental income, so I'm gonna deduct about $115 per month, and you can see the formula right there is 5% of my total monthly rental income right there. And this is not going to always be consistent. I'm just projecting this because I want to be a good investor. In order for me to cover unexpected costs, I will expect the costs. And on paper, I will deduct that to make sure that my rental income will help me cover it, or at least cover majority of my expenses. So I could basically own a home for very little amount of money that I have to put in each and every month. All right, so now real estate taxes, you get all this information through the property details in itself. So I'm gonna drag this back over here and actually show you where I get this information from. Right here, right? The monthly payment, you see the insurance and property taxes, but property taxes could also fluctuate each and every year, and it depends on the value of the home. One of the more accurate ways I find this information is through here. If I keep on scrolling down, I see property tax 2020. It's about $6,756. There's an increase of about $200 from 2019. So I'm going to do some quick calculations, and I'm probably going to increase this tax about, I don't know, $100. All right, so I'm going to be conservative and actually add about like $100 on there. And I'm going to say my next year, say if I own this property, I would pay $6,850. And then I divide that by 12 so I could find the monthly expenses. And then that will equal to $570.83. All right, to own this property and just to pay taxes on. And now rental property insurance, I'll just grab that information from the monthly payments calculator that they already have, and I'm going to put 195. All right, and then HOA fees 0, so that's good. And then replacement reserves, similar to my repairs and maintenance. The replacement reserve is just there as a placeholder, and I'm expecting that I have to spend money every so years in order to replace some sort of thing that's wrong with the property. So an example of this is the roof. The roof tends to, on average, need to be replaced every 30 years. So you are basically projecting and also expecting that amount, and you're doing your due diligence in order for you to expect that cost. You're expecting it and plugging it into the calculator, so you're saving that amount of money, and you are not like broke by the time you have to replace the roof. And that's exactly what this is here for. It is 5% of the monthly rental income. And now for utilities, this will obviously depend on your usage and also your roommates or your tenants' usage. And since I am trying to cover the cost of utilities in my rent, because the rent includes of all utilities, I would have to pay for all these utilities. I'm not going to split with my roommates, and that's just based on my personal preference as a landlord. So I grabbed these numbers through talking to other people who have lived in Texas and in San Antonio, and also my realtor. So all these numbers are just through research and talking to other people. So you would just find that out through through talking, networking. That's one of the cool things about finding information. You talk to other people and holy crap, you found information. Wow, what a great concept. All right, pest control, probably $0. I don't expect to get any rats, but okay, whatever. $0. Accounting fees. My tax returns probably cost me $150 to $200 per month, not per month, sorry, per year. So I'm not gonna really put into that because I have to file my taxes anyways. And then advertising, maybe I have to spend like $50, not per month, but since this is monthly expenses, I would probably have to spend $50 annually to post it on, I don't know, Craigslist or Zillow and all that whatnot. So I would avoid that and put 0. Now here's the actual net operating income. So that means just your operating income minus your operating expense, and which would come out to about $8,510.04 per year. And now we go into the capitalization rate, the cap rate and stuff. This, you don't have to worry about it. That's just a very semi-advanced terminology that you're not really going to care for. It's just an arbitrary number in this case, but anything above 5% is okay for their first investment. Let's just start off with that. I'm not going to go into too much deeper than that, but let's keep on going. All right, actual purchase cost is about $250,000, right? Let's say I'm paying for the asking price. And now all these numbers calculated because I put some formulas there. I'm planning to put 20% down as my down payment. The acquisition costs and the loan fees are basically the closing costs. I have searched that it's about like 2% of the purchase price. So just put that in there. That's about $5,000. The length of the mortgage, I'm trying to aim for a 30-year mortgage. And then the interest fee is probably around 3%. I think 3% is a little bit higher than what is currently right now, but let's be conservative and put 3%. And now here it calculates all this other stuff for you, right? All this information for you. Bam. So a total annual debt service is about like $10,000. Which is not bad actually. Okay, so because we're gonna go into the actual cash flow, because we're gonna be covered through our rental income, right? So keep that in mind. Now for the holy grail of information that you're looking for. This property will probably cost me about $134 to own. And the annual cash flow, I will probably be losing about $1,000, $1,608. And then I have like about a 3% negative cash on cash return. You might be thinking to yourself, that's why would I invest in this type of property? It's making me lose money. I lose $1,000, $1,608 per year. Here's the thing right now. You ready for it? Before I continue, smash that like button because it's about to blow your mind and it is about to change some of your guys' perspective. So smash the thumbs up button, dude. All right. So the reason why I think this is a good investment, regardless of me losing about $1,000 and $1,600, is because you have to think about what would you be spending in rent. Based on my research in San Antonio, if I was to live in an apartment that is a decent apartment, I would say if I was even trying to be in the frugal side, a 1-bedroom, 1-bath would cost me about $800 per month. Now compare this with a property that I actually own with 4 roommates. It will probably cost me $1,600 to own the property each year compared to $800 per month. Now, if you calculate the savings right now, I will do some very simple calculations. So let's say $800 per month and you live there for a whole year. You times that by 12, 800 times 12, $9,600 that you are paying some landlord that owns the actual apartment. Now, compare this to what you are currently going to own. Say you buy this property, right? Say I buy this property. I'm paying $134 to own this property. Now think about the appreciation. On average, I think it's about like 5 to 7% on annual basis that a property appreciates. So it's going to make me money in the long run. and I'm only investing $134. It's not an expense anymore. It's an investment. I am investing in a home in order for me to hopefully in the next decade, I will make more money out of it just by spending $134 compared to $800 for an apartment that I will not have any equity in whenever I'm done leasing the apartment. So you have to think about the savings because that is the realistic situation, right? You are not just going to be homeless, hopefully not, if you decide not to buy this property. You'll probably find a place to rent out, right? You probably will find, maybe even if you are going to be like, say, one of the tenants to another landlord that's like renting out the home, like a bedroom or something, maybe around $500 per month. But I'm doing the work, right, as a landlord. I'd rather spend $134 per month for me to own a property instead of me renting a room that another person is using this strategy as and paying him or her $500 per month so I could pay for his or her mortgage. So that's why it's a little bit cool to house hack. House hacking is not a new concept. It is a very money-saving type of strategy. It is not complex. It does take a little bit of work and about a lot of analyzing, and it depends on your situation, on what you're comfortable with. $134 per month, as if you even think about it as like your rent, you can. I don't think you will ever find a place that will cost that little amount of money for you to live in a 5-bedroom, 4-bath house. So keep that in mind, and that is why I think real estate is kind of cool, because you are essentially living for a very low amount if you are willing to give up some comfort and some delayed gratification. Just for like $134, you get to own a home and call yourself a homeowner, and also in hopes in the next decade you'll probably make a lot bit more money than $134 per month, and basically you could cover that cost just from like Ubering one weekend. So yeah, it's cool. So let's see if you guys like this type of videos. I know it's probably a little bit longer, but I want to go into more in depth and try to deep dive as much as possible and give you guys as much information, because I wish I knew about this probably like 4 years ago. I wish I would have known this type of information, and also known there are tools out there that will help me to do this type of analysis, because it builds wealth. It makes building wealth so much simpler and easier. So hope you guys enjoyed this video. If you do, please comment down below on what you would like to see next, or what I could do better on, so I could continuously improve and actually show you guys how I'm going through this process of buying a new home, and see what I decide on, because I might actually eventually buy this property. Who knows? But it is all up in the air right now, right? It's too early for me to say, because I'm still in the early stages of me buying a property. So comment down below on what you want to see next. Smash the like button. Don't forget to subscribe and follow me on this journey of buying my second property. See you later, dude.
I got some vices, they talking on me. Got a new bitch who be loving on me. I told her God every day of the week. Know they all watching and plotting on me. Got a little buzz, I got places to be. You better decide, I'm come running.